7th at 5:32 p.m., Donald Trump announced a ceasefire with Iran. And from this announcement, we learned two things. First, Truth Social is the single greatest invention of our generation and is totally not a useless social media platform. And second, markets don't like uncertainty, because the very next day after the announcement, the markets ripped. The S&P closed up 2.5%, the Nasdaq almost 3%, and the Dow climbed more than 1,300 points, which marked its best day in almost a year. But it didn't just stop there, because a few weeks later, stocks were back at record highs, even as the ceasefire was actively falling apart in real time. Traditional financial media was calling this a relief rally, that the markets were celebrating peace, but the truth is, that's not what this was. This was something else entirely. But to understand what actually happened, why markets can be at all-time highs when there's a war going on, you first need to understand what Wall Street looked like going into this, because there's a lot more to this story than just a relief rally. On February 28th, the U.S. and Israel launched joint airstrikes on Iran. Supreme Leader Ali Khamenei was killed. Then Iran shut down the Strait of Hormuz, and the market had its worst 5-week losing streak in nearly 4 years. The S&P was down nearly 9% by the end of March. And while your retirement account was quietly screaming, there was something else happening underneath the surface. Wall Street was beginning to panic. Hedge funds didn't just start repositioning. They were selling at the fastest pace in 13 years. And that's not a loose estimate. That's hard data, because Goldman Sachs had a front row seat to the show. They run what's called a prime brokerage desk, which services most of the major hedge funds on Wall Street, which means they see what these hedge funds are buying, what they're selling, and just how leveraged they are. And according to Goldman's own numbers, Q1 hedge fund selling in North America was the largest since April 2020. Gross leverage was sitting over 300%, near an all-time high, and short exposure to macro